Over the last 30 years, we've only ever seen this happen 8 times. But what is it, and why does it matter for all of us as traders and investors? In today's video, we'll take a look at what exactly is going on with the S&P 500 and NASDAQ, and what the data suggests occurs next. Also, can NVDA continue its run up over 30% since we liked it 2 weeks ago? It's really about to approach all-time highs. And are there other opportunities on the market's horizon? Well, as it turns out, there are quite a few, so let's investigate them together as we cover stocks, commodities, and cryptos in today's show. It's going to be a great one, guys. I'll see you very soon. Well, welcome back everyone to The Daily Show. My name's Tom, and in today's video, we're discussing everything from the macro to the data and why it matters for all of us as traders and investors. If it's your first time here, then why not subscribe? Smash that like button if you enjoyed today's video. But let's get into it straight away with the data, because of course, when it comes to 8 times, this is pretty rare. Both the NASDAQ and the S&P 500 have had monster winning streaks, something we just don't see that often, but even rarer when we consider when we have a 5% run. Only 2 weeks ago, everyone thought a recession was coming. Now it seems like the recession is gone and a soft landing is here. We probably know on this channel there is no soft landing coming, but again, timing will be everything. When it comes to those last 8 sessions though, the interesting stat is that we have never seen the 9th session actually be bullish. That is a 0% strike rate when it comes to the next point being up. So I'd like to ask you right now, do you think the market will be bullish over the next 24 hours or bearish? Will it buck the trend? Will it change the stats? Well, I guess that will be to be determined, but this market is very strange when it comes to how it's been acting. So many historical firsts over the last 4 years, it's not funny. Jackson Hole Symposium is coming, so there is some news. I did share on the weekend video, we'd bring you the stats. As long as Jerome Powell pretty much rocks up, it does seem like it will be overall kind of a net neutral, slightly bullish event. Do remember when Yellen didn't attend and Bernanke didn't attend, in both times, it was bearish for the markets. These are some further stats when you go back through, and I don't think that's the most important data we should be looking at. Instead, we should be considering, well, what are these central bankers actually doing? This is a great chart from the Financial Times, and I think you should probably take a snapshot of this one. And what it shows you is global liquidity versus long-term cycles. And if you actually look at these overall cycles, you really notice that we do tend to follow these particular paths. And right now, what are we seeing? A global liquidity spike with a long-term cycle spike that leads into 2025. So remember when we consider the Wayne Whaley breadth thrust and a few other stats that we've brought up on the show in recent times, that is fairly bullish. And we do need to remember we are in an AI bubble. So it's hard to stop some of these stocks. And in particular, Goldman Sachs is out there once again loving NVIDIA. They've updated their target to now $135. They obviously believe NVIDIA is a great stock, and they think that it is pretty much going to go gangbusters in the future. I'm sure they'll upgrade it a few more times. Could we actually see further runs though in this market? Well, Grant Hawkridge over on X, follow him if you're interested, did do some data points when it comes to starting a new bull market. Now remember, what a start of a new bull market is when we actually go from a technical bear market, which is up to down over 20%, and then we start a new run. And that happened in 2022. Of course, we fought inflation over that period, arguably have beaten it now, and we're at this point where we are right now. But look at the median, 978 days, 91.3% return. So does that mean we're going to get another 30% on this market over the period of 2025? Well, it is very possible. And of course, Eric Schmidt recently has come out and pretty much reiterated that he believes that NVIDIA is an absolute buy. And he also believes that AMD and others cannot compete yet with NVIDIA's dominant CUDA software. I always say there's only one thing we need to know about NVIDIA, and that is $100 trillion. The amount of money in terms of CEOs that were at a conference earlier this year really tells you all you want to know about whether NVIDIA can pretty much live up to the expectations. The market wants all their products. They want to buy as much as they can make. The question then is, can they make enough? And of course, that will be the real worry when it comes to the earnings, which will be a blockbuster coming up in only a few weeks. Make sure to subscribe for that. Another bit of news that I thought was interesting that a lot of people are missing, which is this one here shared from Anna Wong over on X. And it says here, the busiest port complex in the US is churning through import volumes near highs set during the pandemic, despite worries about a cooling economy. Now, we recently saw the retail sales numbers. They were pretty strong, but we also know that maybe people are starting to front load ahead of Black Friday. Maybe it's got to do with potential tariffs on the future. Who knows? You can take that data two ways, but in general, the ports are busy, and that's not necessarily a bad thing right now. Net central bank gold purchases. If you've been watching the channel for a while, you would know that we like gold. We believe we are in late cycle investing, and gold, particularly when we're in a currency war with other countries in the world, does tend to lead into, of course, very, very good bullish periods. Now, remember, gold went through a lost decade. It went through a period of time where it sucked. But at the same time, what has accelerated in recent periods has been that central bankers are buying it. Now, this is mainly China and Russia that are purchasing it out of control, and that's because they're trying to start a new main currency. Yes, they're going for the major, and that is the US dollar. Will they be able to do it? Time will tell, but at this point, gold is being purchased in huge swathes by them, helping to support this idea that we have that it could go towards $3,000. What about the earnings this earnings season? A lot of people forgot about this. Of course, we were tracking it the whole way through the crash recently. And yeah, it's not too bad. But I would say this one thing. It's interesting. They've done it again. They've changed the goalposts when it comes to earnings moving forward. And they've lowered their expectations for the next earnings and the next earnings afterwards. So will they be able to beat them? It does seem like it's a real possibility here. Also, Whaley breadth thrust. I know a lot of you said stop putting in the video, but I just thought this was an interesting chart for it. Whaley breadth thrust, if you're not familiar, has an incredible good record of being bullish over the next 6 and 9 month periods. We did see one just happen the other day. We saw that little bit of a pullback, which is normal, but it does tend to lead into, of course, bullish thrusts. And this is just another way you can see it here on the charts. US markets for the year so far, DJ transports are down. A lot of people think the Dow theory is broken, or maybe Dow theory is telling us a recession is on the path. If you're not familiar with Dow theory, definitely check it out. But remember, in this day and age, I think Dow theory needs to be revisited, and basically we have to use semiconductors as much as possible. A couple of other charts that I thought were worth it. Follow us in the X description links down below. And basically what we've been talking about over the last 24 hours were two particular trades. We did this in our live show, which we do every Monday for free. And of course, we do have a private community as well. Links in the description as well for that. But basically, Bitcoin was setting up very nice while we were doing the live stream from a technical replication standpoint. I thought I'd just quickly show what that looks like. And I'd also show the other one that we're talking about during the session, which is, of course, a terrible stock in Intel. But guess what? It's managed to do a 3.5% session during that day. So again, it doesn't really matter about your perception on whether something is worth it or not when you're trading and investing, which we both do on this channel. They're different things. When you trade, you don't really care what you're trading as long as you can kind of risk control what you're doing. When you're investing, you really care about the company or the asset class that you're in. Unemployment is rising. Of course, that has a lot of people saying recession is just around the corner. And while I do think we're going to accelerate like this eventually, do remember that this time around, it's coming off historical lows. So there's a good chance that we can kind of drive for a little bit longer before seeing that real acceleration that leads us into the inevitable recession, which we should see over the next 1 to 2 years. You might not want to hear it, but there are some signs, late cycle signs that we're seeing. Gold, utilities, and a few other things that are starting to say, you know what, the market's starting to turn defensive. Now, it doesn't happen overnight, but it does happen gradually. And we'll be watching that storyline as it plays out over this period of time. Now, in terms of GDP growth, though, Goldman Sachs are bullish. They've upgraded their growth rate to 2.3%. So one of the charts that we've been talking about recently has been the upcoming rate cut. Of course, it's expected to happen in September, and the way that the market is reacting right now is similar to a non-recessionary path over the next 12 months. This will be something we need to watch, and remember, what happens over the next 3 months in particular will tell us a lot about what the market is going to do. Will we get the Whaley breadth thrust following through, or will we go into a recession quicker than expected? A lot of that also has to do with the rate at which they cut. 50 basis points, not good. If the Fed panics, if Jerome is freaking out under the desk, then we need to also be freaking out under the desk. So, of course, that will be a big story in September. Speaking of September, we do know that Whaley, or Wayne here, has shared some data over on X, and that particular data says that between the back end of September and early October, we may expect a little bit of a secondary dip. Now, this is probably going to come off an all-time high at this stage, but we do need to remember that this period is after the buyback zone that we're in right now, And it is also after NVDA earnings. Speaking of earnings, still a few to come. These are the expected options moves, and Snow and Zoom and Target are still coming out on Wednesday. Let's have a look at rotation. So clearly rotation was into mostly growth stocks through the session. Semiconductors recovered nicely after being down quite a lot at the start, and the market was risk on across the board. And this brings us to 5 days now of risk on. Semiconductors, clean energy, technology, community discretionary, and GDX. Most notably, the recovery in KRE, which is regional banks, is not a bad sign for the market. And in particular, it could be quite good actually for the Russell 2000. Let's move over to the S&P 500 charts now. So advanced decline line, something you should always have on your charts. That's at a new high. Does that mark a very good sign? Yeah, it pretty much tells us that pullbacks should be met by bull demand. And at the point now, we're kind of wondering, will we get a pullback in this market? Well, I think we will. It could be after an all-time high though, so you need to remember that. And in the next video, we'll take a look, depending on how this session ends up playing out, to what happens after an all-time high, because there are some interesting stats surrounding that and the next couple of weeks. What about the US 500 from the futures market? Well, do remember, we do still have an overall higher high, higher low, higher high, higher low style run. Another thing that I've noticed is the 2-hour 20 moving average. 20 moving average, probably one of the best indicators on a chart, seems to be finding a lot of dynamic support. And if the market breaks underneath this, it could be a first warning sign of some problems on the horizon. For buyers, you'll be wanting to look around this level actually, because that's the 1-day expected options move low plus where we've seen previous purchasing. But until we make a new lower low, we can't be sure that we're going to get any of those gap fills. So it's still up and away until proven otherwise. Why is this? Well, it has to do with options. Positive gamma flow is everywhere, 5620 in particular. If we're able to get through that over the next 24 hours, that could create even further squeezing events. Remember, it's hard to go against positive gamma, but we do need to know that there is a lot of options trades. In fact, over the last 2 weeks, options have exploded in this market. And in particular, there could be some very good profiteering from the riders of options, being pretty much Wall Street and the big banks, over the next coming sessions. So to slow the market down here might be in their best favor, and that's something we'll be thinking about. S&P 500 versus CTAs, we know that they're being caught off guard. This chart really shows that. Same with the NASDAQ. You can see that they're still having to purchase in, and although that is delayed data, we do expect it to still force all-time highs due to the fact that CTAs are now really underperforming the market for 2024. Another CTA position that I thought was interesting was the dollar index. We don't often share this particular chart, but you'll notice that the dollar index is down across both numbers here in terms of today, yesterday, and previous month ago. And this does lead into us thinking that the dollar will continue to weaken over the next coming sessions. Silver CTAs starting to buy up, copper starting to buy up, gold neutral at this point, Brent also neutral at this point, and NVDA still in positive gamma. Right into the monstrous call wall though that is for this Friday. 130 in particular, what a strike zone. Look how many calls are here and at 125. If we're able to get through 130 and hold it, you've got to think that they're going to have to start hedging that position. And again, that can cause some significant volatility to the upside from NVIDIA's perspective. Tesla, on the other hand, not quite at the resistance. 228 to 230, a key level to be watching here when it comes to the overall call wall, and something we will be watching. Let's jump into the charts now. Consumer discretionary versus staple, showing us that a little bit of risk on is coming back into the markets after the fall last week. We've got US 2 versus 10. This is yield uninversion. Again, we're moving further away from uninversion, which means probably no recession just yet. We are watching that chart quite a lot. And treasuries are still within the zone. So interesting point here. Yields have actually gone up a little bit and recovered, yet at the same time, treasuries are still buying up. Now, we know Warren Buffett's been buying treasuries, but we also know that the bonds market's not stupid. And I believe, along with a lot of you in the comments section, that treasuries are starting to be purchased for longer term horizon-based trades, 12, 18 months, 2 years, that type of thing. US dollar broke below our important 102.09, which really means that we should be in the next leg down. The legs here, you can see, are usually in the same kind of movement. So we're expecting around 101 to maybe even 160. So US dollar does look quite weak, and that's leading into copper finding strength. We liked this trade last week. It was very, very nice. We're at the resistance at this point, so this is where we expect a little bit of shakiness from copper. Gold breaking out, but more importantly, silver hitting into that massive resistance zone of 29.40. Very bullish look on silver here. Silver, super undervalued compared to gold. It's had a great move since last week when we've been talking about it. 27.20 all the way up to 29.40. That's a percentage gain, just to give you an idea, of 8% almost here on silver, which is nothing to sneeze at. We're at this resistance. If we get a little bit higher, we could be looking at a multi-month move. So silver certainly starting to fire there. US oil, on the other hand, terrible, absolutely terrible, falling all the way back down. This is a politically charged trade. Be very careful into the US election this year. Everyone wants a different thing from oil, and we've noticed recently it's, of course, dropped off. It also doesn't like rate cuts on the horizon. So, yeah, be careful of oil. If it got above 79, we would have gone bullish on it. But at this stage, we have to see structure, and we just don't have any of that at this point. Tesla 222 opens up 231, guys. Obviously, this is positive gamma situation. It's playing catch up. Tesla could do well over the next couple of sessions. And another one that's doing all right is Intel. Now, Intel was up 3.11% on the session. And this is just that old story of, even though you might hate a stock or think it's bad, remember, trades and investments are different. Do I think Intel's investment worthy? Personally, I don't think so. But from a trade perspective, if you find a replicable system or a replicable setup, and if you keep doing it 40 times plus, then it can be quite good. Now, we saw this with Crowd last week, Intel this week. Some nice moves there, and certainly a couple of gains. We did that one live on the Monday show as well, so you can check that out if you're interested. NVDA 130, we know this is a call wall. I wouldn't fight the system personally on NVIDIA. I think it's going to an all-time high. We've talked about this. It closed on its high. That's actually quite bullish. But again, the stats are kind of pointing towards the next 24 hours, maybe being weak on that stock. HSI, the Chinese market, doing very, very nicely here. You'll notice it has a breakout past 17.4. Two kind of red sessions. I'd like to see a green session come in from here, but I think the next level for HSI should be around that 18,300. Some breakouts from JD, Baba, Tencent, and a couple of other stocks. Baidu this week. So will it be able to hold up? We'll find out if it can. US 30 starting to get a little overbought here. You'll see I've got an 8 read on this indicator. This is starting to show us that we're getting near that kind of topping of this rally. So far, we need a bit of a pullback in time or a little bit of consolidation. And the same thing's starting to happen on the NASDAQ and S&P as well. The US 2K, though, hasn't quite got those reads. So it's possible the US 2K could get up to 2,250. Tom Lee, Fundstrat, very bullish on this pair. And of course, they're looking for it to go really high, like 3,000 or something as their call for the end of the year. I think it's something like that. In this case, I think that if we get through 2430, that's a very bullish 6 months potentially for the Russell 2000. But first steps first, let's get to 2250. And at this point, it's playing catch up. Gap fill on the Qs, important point. Again, it makes sense to have some resistance here. We spoke about it in our Monday Open show. We thought this was possible. We've now achieved it. Do we need to go here before we get a pullback? Maybe. Still very, very bullish market though. So again, no signs of weakness, no signs of panic, no signs of any of those types of things, guys. So just all, you're just trying to make a prediction at this point. Remember, we like to react whenever possible and have patience. Another chart that really showed itself during our live stream was, of course, crypto. Bitcoin actually showed itself during the live stream. We talked about the bullish action of the market past 58,000, kind of 780 zone here. Very bullish, nice move on it so far. Good 2-to-1 trade so far if you have a stop below here. And of course, if you got it below here, you're looking towards a 62K breakout. And if it gets past 62,000 and closes, I think we feel it's going towards 68K. And if it gets through 68K, well, all-time highs in store for crypto. Certainly looking a lot better, and it needs to play catch-up. It's quite behind the stock market at this point, especially when it comes to the other coins. Ethereum still not even through that resistance. So just showing you again, Bitcoin leads, Ethereum, Solana, the others come afterwards. In terms of the news for the week ahead, really the only thing that you need to think about is Wednesday, FOMC meeting minutes will be disclosed. Then we have the flash manufacturing PMI. And then, of course, we've got Jackson Hole with Fed Chair Powell coming out to annoy us. Or if he doesn't annoy us, then, of course, maybe the market will go down if he's not there. But Fed Chair Powell coming out at 10 a.m. on Friday with a speech. Maybe he'll give us some more ideas about what's happening in September. If you enjoyed today's show, guys, remember to subscribe, smash that like button, follow us over on X as well. And just remember, if you have kind of like fear of missing out, if you're feeling FOMO right now, come from the abundance mindset, something we talk a lot about on this channel. There are always other trades. Just over the last 24 hours, there were probably 150 different great trades out there on the market that are very replicable. We focused on, of course, Intel. We focused on Bitcoin. They were two that were really nice. But realistically, it's just about that replication. It's about always not feeling any particular emotion. Remember, we talk about temperament being so important. So I hope that helps. And if you enjoyed today's video, remember to subscribe and smash that like button. Bye for now, everyone. See you in the next.